Investors and traders, welcome to the channel Market Chart Pattern. Today is 14th of May 2024. Hope everyone is having a great day. In this video, we will take a look at the key US markets. We will start by taking a look at the dollar index. I believe this is one of the really important charts for today. And then we'll take a look at the bond market through the eyes of treasury notes, starting from the shorter end of 2-year notes and then looking at 10-year 30-year long bond futures, and also we'll cover the TLT. Then we'll take a look at the gold market briefly, and then we'll take a deep dive into the stock market indices. As always, this video is for educational purposes only and it's not financial advice. So what we are looking at is the daily chart of the dollar index, which is a basket of major currencies. And here, one of the things that I would like to point out is that today's price action, we had economic data news coming out today, and what we saw is some strength earlier on, and then selling came through. So one of the key points that just reiterating here, we think that 107 level is a key level, a key top in the market. And what we were expecting was that perhaps a retest of 107 because of this ABCD one-to-one price projection taking us nearly there. But this level, which was reached on the 1st of May 2024, and the market rejected higher prices, actually filled in this little gap that you see here between these two red lines, and also the 1.618 expansion coming in here at 106.40. So the market went right exactly to this level, and then we have seen lower prices, and then market rallied right into the resistance coming in from the moving averages. And also the key thing is this 38.2% retracement, which is from this low to this high, and the market actually begins to close below this for several days, and again today is closing lower. So we have this trend line in motion as well, which is an indication that higher prices are actually being rejected, and we could see a rotation lower in the dollar index. Now tomorrow we have the CPI inflation data coming out, so it's another going to be a really important day where there's going to be a lot of movements in the asset classes, such as the currencies, the dollar, gold, stock indices, many things, as the market is pretty sensitive to that data these days. So it'll be another day to take a look at, but looks like the kind of what we were expecting, that the market in dollar to move lower, that move might be in the making. Now quickly show you the flip side of it, that is the euro currency. So this is the chart of a daily chart of euro USD. So euro is about 51% of the dollar index. So whatever happens in dollar index is kind of the mirror image, but not 100% exact because of its formation. So this is the trend line that we had been watching for quite some time. The subscribers will know we have been talking about it for quite some time now. And today we had a very nice clean break out of it. And this low that you see around here, it is a really important low because of, look at the confluence of different patterns, ABCD plus 786, and then the smaller expansions coming around here. So it's a really important low which came in at 106 level roughly, and ever since we had been expecting dollar to go lower, as in dollar index, and the euro currency to go higher versus the dollar, and to get a further confirmation, we were really waiting for this break of this trend line. What would be really nice is to have a one consecutive day, and then we could have a macro condition setting up where actually the dollar is likely to go lower, and other currencies go higher, and with other asset classes as well. So we'll talk a little bit further about this, but first we'll take a look at the yields. Okay, so now I will move to the daily chart of the 2-year treasury note. So this is what you see on your right hand side is actually the yields, it's not the price axis. And here, this is what we have been talking about for quite some time, that we have this head and shoulder pattern in play, in my opinion. Every time the market hits 5% or goes above it, I think that's gonna be a pretty significant resistance coming into this market, and the pattern calls for this bigger ABCD, which is also available in other bond markets as well. We'll just talk about that as well. So in fact, the pattern calls for the yields to move as low as 3.9%. So that is on the cards as well, which after that could be a pretty strong support level. So I'm not going to go into the details of the patterns that we see, but just want to show you the price action which happened today. And you can see that just like the dollar, this actually also moved lower. Now, if you look at the price action, what we see in 2-year treasury note is quite similar to what we are actually looking at in dollar as well. So of course, these markets, it's a big chart of cash flow. So cash is moving from one asset to another. This is why we take a look at a lot of these asset classes here on the channel. Okay, so with that, just want to really quickly show you what the price action looked like if you were watching this on intraday basis. So we'll just move down to the 15-minute chart. This is when the news came out. You'll see this big spike. It just went there and then just boom, 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 being sold and just closed much lower. So that's really good. Okay, then now we'll just quickly move to the 10-year treasury note. This is the daily chart, and we can see strength coming in this market as well. So otherwise, the yields are moving lower. Key is 109.16, break 38.2% retracement, break the bearish symmetry. It will be a good move for this market for the yields to move lower. So this is the daily chart of the 30-year long bond futures, and what we see is this ABCD. So now there's more and more the chance for that we are actually in the CD leg higher, which could see the yields move for much lower, but still in a bear market. Overall, in my opinion, I think we are seeing more and more of that evidence. So if it breaks above on a consecutive daily closing basis above this 116.18 level, and then break the bearish symmetry, break above channel highs, it's going to be fantastic for this market. In other words, yields at the longer term end of the yield curve moving lower. If you look at the TLT, this is the iShares 20+ year treasury bond ETF. So longer duration bonds are part of this one. A similar kind of pattern formation to the 30-year long bond futures. Really, if we can get above the 92.40, then much like what we saw in the long bond futures, we could be seeing a leg higher, which would actually go and target 150 and above. Now, one of the things that I would like to point out is what we have seen today in terms of dollar moving lower, yields moving lower. Then I'm just thinking we could have a macro condition setting up for the summer of 2024. If we think what the market is doing is what we think is correct, then we could have something similar to this, where I've just tried to put together different major asset classes that we usually take a look at in this on this channel. And I've put columns on asset class, lower, neutral, higher. So the dollar, our view is setting up as the dollar is actually likely to move lower, at least in the medium term. So this is for macro for the summer of 2024. And then the US bonds, the yields, so I'm including bonds, which is shorter term, longer term, including TLT, for example. Macro view is that it's also setting up to move lower. Metals are a bit more neutral to higher, because in gold, for example, the precious metals, we've already seen a fantastic move higher. So maybe it takes more time for this metal. It might just go sideways, for example. So more neutral, and then tendency towards higher, longer term trend, for example. And the risky assets such as stocks. So if we have got the yields moving lower, the dollar moving lower, that should be positive for risky assets such as stocks to move higher as well. And then the other beneficiary from lower dollar should be the commodities, but I should have also put X in the neutral column as well, so neutral to higher. And these commodities include such as soft commodities, grains, soybeans, wheat, sugar, cocoa, coffee, etc. So we don't really take a deep look into those markets on the channel yet, but I think I will start some coverage of that as well, at least in a smaller format. Okay, so that's the macro, which possibly might be setting up, and we'll get further confirmation as we move further through the economic data coming out in the next 2 weeks, towards the end of May, for example. Okay, so now let's move and take a quick look at the gold futures. So this is the gold futures. Gold had a pretty nice day today, and that is, of course, when yields moved lower, the dollar moved lower. That should be supportive of the gold, which is being priced in the dollar terms here. And so we are looking at the COMEX gold. It's not the spot gold, so the prices, if you're comparing with spot, might be a little bit different. So just want to make you aware of that. One of the possible patterns that we're watching for is that maybe we are actually still in a correction, and that correction could in fact go to ABCD as low as 2220 level, where we have a confluence of a number of patterns and ratios coming together. So that pretty very strong support here. And the reason is that the rally which took place off the lows of 2285, it stopped right at the 61.8% retracement. And if it just gets above that, maybe it's going to target this box as well. Then maybe we saw the low and we are likely to start another leg higher. Gold looks pretty good, but if you look at it since February, it already had a fantastic run. So whether it goes through some sideways consolidation pattern is something which is normal to have for a big run like this in this metal. So again, watching this today was a pretty good positive day for it. Maybe from a momentum perspective on the daily chart, it begins to move close above 20, and the price already closed above the 20-day moving average today, so that's positive as well. So really watching for this 61.8% retracement coming around 2385 level, whether it's able to get above on closing basis on daily chart. That would be then further formative for this, and then it might be actually moving an A, B, C, D to the upside, which will take it to this upper boundary around here. Otherwise, if it just begins to close lower, then we might actually be in this ABCD price pattern formation. So that's why I'm a bit more neutral, waiting and watching for further confirmation coming from price action on gold. Okay, now what we'll do is we'll start by taking a look at the equity markets, by taking a look at the European markets first. So we'll start by taking a look at the German DAX. So this is the chart of German DAX. It's quite similar to what we have in the United States in Dow Jones, in the sense that it's a stock of about 30 stocks. Now, I'm not sure whether it's price weighted or it's market cap weighted. I think it's market cap weighted. Dow Jones is price weighted, so that's one difference. But I'll double check on this one. Now, it has had a very nice, fantastic move here. One of the key things is that the European markets, when this correction happened beginning of April, they stopped right at this 38.2% retracement and began to rally. This is something which the US markets did not do. So the US markets were actually slightly weaker, whereas the European markets, after finding support from this 38.2% retracement of this low to this high, began to actually reject lower prices and consolidate here. And then we have seen a very nice move up right to the 1.272 expansion. We have seen 2-day consolidation here. The market went a little bit lower to the close of the Friday 10th of May candles low, and when it did that, buyers came in, it moved it up higher. So maybe we might see 1 or 2 days where further sideways trading range price action. Then ultimately I would think that it will just break these highs and move towards the 1.618 expansion. So something like this, a move towards 19,160 is possible. Now, if we just take a look at the UK's FTSE 100, this is the blue chip stocks of 100 companies, and it had been in a big consolidation, sideways price action for a long time. You can see pretty much all of 2023, and then from October just began to break out. But again, still a really range bound price action, and it's really around here in April when the Bank of England began to first give indication that their next move would actually be towards making the interest rates go lower, that this index started to really move. And of course, the interest rate is a little bit higher, I think about 25 basis point higher than what it is in the United States. And if that is likely to stay and go lower, then the risky assets, the kind of macro that we were talking about, this is what we saw really jumping up. Now it's really between this 1.272 to 1.618 expansion of this entire range, and then we have this 86.45 where we have this big ABCD completing. So the chances are we could see slightly more high in this index to complete these patterns. But you can see there has already been a fair amount of elevation in the stock prices for this index. Now, moving into the US markets, will be a quick view this time. We can see this is the daily chart on the S&P 500 cash basis. The market is really strong. Our scenario of this having an ABCD correction, going below these low, maybe it's just getting less and less probability because the market is really strong. What could happen is that maybe we get a pullback right into this zone. This is what we talked about in the weekend video. So for now, I'm just still keeping this here as a possibility that we might see a pullback, because you can see it's been a really nice run here, and looks like 19th of April was probably the low, but there is a possibility we might actually go slightly higher, make a slightly higher high, and then begin to pull back. So again, we'll just begin to get sort of further clues by taking a look at the futures as well. And if we take a look at the futures market, we can see that the futures were also strong today, and the chances are that we are actually heading towards these highs here. And then we might actually make a new high as well. So what we were watching for, this 78.6% retracement being a resistance level, and then the market doing a ABCD correction. The chances for that are getting less now because the market has retraced so much, which is actually good for the bullish or the bulls really. So again, now watching this one, it closed slightly above 78.6% retracement. So yeah, I think tomorrow is going to be a really important day to watch what the price action will look like. Now, if we take a look at the QQQ, this is the ETF for the NASDAQ 100, very strong. It closed above the 78.6% retracement. I think now it's going for the 449 level. Momentum also looks pretty good. We were watching for this ABCD. Chances are it might not happen, so we'll wait for further price action, but looks like it's going more for the highs of 21st of March 2024. And if we just look at NQ, which is the US 100 index, again very strong, above 78.6% retracement, going for these highs in my opinion. And finally, if we take a look at the NQs, this is the future. So one of the things is that, last Friday, we were getting a different kind of a picture based on what we saw in cash and what we're seeing in futures. Now the futures are also strong and breaking above the 78.6% retracement and also the 1.618 expansion. So this again, the scenario we were looking for a ABCD correction, I think it's getting weaker and weaker because the market is so strong. But we could see a pullback coming into one of these levels around here, which will be between 61.8% and 78.6% retracement. Now, a really interesting thing before we move to Dow, I just wanted to show you the chart of Russell 2000, because this one had been pretty weak, and this is why when we're looking at this on on last Monday when we did the video, excuse me, last Friday. So I did the video over the weekend. It's because it closed below the 61.8% retracements 2070, but today it's also really strong, so it's closing above that as well. So that's very good news for the bulls, and the momentum is also strong. So we'll just keep an eye on IWM because it is its patterns are really important to be watched. Now in IWM, which is the ETF for Russell 2000, is right at the 78.6% retracement. Maybe from futures it might begin to get a push as well, but it's just closing slightly on the 78.6% retracement on the ETF. Now we'll take a look at the Dow Jones Index. Dow Jones Index looks a little bit weaker compared to S&P 500 and NASDAQ, for example, because for the second consecutive day, it is closing. It retraced pretty much a lot of the price action of 13th of May, but still closing below 78.6% retracement. And this is why I'm still keeping this scenario around here. But looks like the 19th of April low was a very important low, and we might see a retracement into this value region of between 61.8% and 78.6% retracement. But these lows of 19th of April might not get taken out because the markets have retraced so much. So there's a lot of bullish action in here. Okay, and last but not least, we'll take a look at NYA, which is the New York Stock Exchange Composite Index, and this also includes the ADRs, which are the American Depository Receipts, so foreign companies trading on the New York Stock Exchange, and it's very bullish price action as well. Look, closing above the 78.6% retracement 1, 2, 3 times, and the chances are it's also going for this high around here, 18,340. So this is what we are watching in the key US markets, and also we took a look at some of the global equity indices for Europe as well, and we see a fairly fair amount of bullishness coming into these markets in the risky assets, for example. And I believe that's because the perception is for the interest rates to move lower. This is also the talk happening in the United Kingdom, in Europe as well, and Fed is also looking to do that. But when they also look at the inflation data, so sometimes they give hawkish speech as well. But the devil is in the details. It's really important to actually dissect the data coming from the CPI, especially the core CPI figures. I think this is something which we'll do on the channel as well, just to see that the components which actually make up the CPI consumer price index, how they are moving, because there could be components of it which are actually jumping a lot. So what I'm hearing is that actually the auto insurance quotes are jumping a lot, and they are a bigger contributor, but Fed has no control over those things. But over time, those quotes will actually get a direction and probably move lower, or stop moving as much as they are in percentage terms, and that should then help to bring the CPI figures lower, which will then help the Fed to make its decision towards the interest rates. So if that sort of a scenario persists, then I believe what we are looking at in terms of macro, in terms of the dollar going lower, the bond yields going lower, and the risky assets moving higher for the summer of 2024, that's kind of macro is most likely setting up. We'll find out more as we get further data, economic data coming out, and of course we'll look at the markets from a technical perspective to make sense of what the markets are likely to do next. So thank you very much for watching the video. Good luck, good trading, and speak to you guys soon. And if you like how we do the technical analysis on the channel, then please subscribe to the channel. And if you found this video of educational value, then please give it a thumbs up. Thank you very much. Speak to you soon.